This podcast is for informational purposes only and is not an offer or solicitation of an offer to buy or sell securities. SNN Network, SNN Inc., and the Planet MicroCap Podcast and the representatives are not licensed brokers, broker-dealers, market makers, investment bankers, investment advisors, analysts, or underwriters. We do not recommend any companies discussed. We may buy and sell securities in any company mentioned and may profit in the event those securities rise in value. We recommend you consult with a professional investment advisor, broker, or legal counsel before purchasing or selling any securities referenced in this podcast. Welcome to the Planet MicroCap Podcast. I'm your host, Robert Kraft, and thank you all so much for the support and for tuning in. Do me a quick favor. If you like what you hear at Planet MicroCap, please take 2 seconds to give us 5 stars on Spotify or Apple. This helps with the search engines so that more folks can also discover and engage with all things microcap stocks. We're excited to announce that we'll be partnering up with MicroCapClub for our full slate of investor conferences in 2025. Ian Cassel and his team at MicroCapClub have not only built and fostered the best community of microcap investors, but it's arguably one of the best investing communities, period. We couldn't be more thrilled to leverage our expertise in curating and hosting large-scale microcap conferences and teaming up with MicroCapClub to put together world-class conferences for the microcap community. First up, the Planet MicroCap Showcase Vegas in partnership with MicroCapClub will be held on April 22 through 24, 2025 at the Paris Hotel and Casino in Las Vegas. Registration is now open. Please visit planetmicrocapshowcase.com to learn more. See you in Vegas. Now, my guest on the show today is Colin King, partner at Circle City Capital Group, Inc., and known as @ValueDon'tLie on Twitter X. I think we've all seen those memes and videos of folks who left their amazing job at Goldman Sachs to buy multiple small businesses. Then, of course, if you subscribe to their newsletter, they'll show you how they did it. All jokes aside, it's a strategy that has worked time and again for many folks out there. However, buying and operating small private businesses is not as easy as social media would make you think. I think that goes without saying. But in any case, I invited on Colin to talk about his journey to launching and running this strategy at Circle City Capital Group. Colin mentioned a number of names during the interview today, and for full disclosure, I'm not a shareholder in any of them. Thank you again for tuning in to the Planet MicroCap Podcast, and please enjoy my conversation with Colin King. Colin, thank you for joining me today. How you doing, man?
I'm good. Hey, thanks for having me.
Absolutely. It's great to have you on here. So, look, I reached out because there's there's a lot we're going to talk about today, but the main theme in doing a little research on Circle City and structure and whatnot is that, I guess I'll get it out of the way from the beginning, is that there's all these memes, and I guess it's my own personal algorithm going around where, you see, I quit my Morgan Stanley job and you can go out there and buy 10 mom and pops and, life is just going to be so much better for you. And, in doing my research on Circle City, you kind of actually have a structure very similar to that. But I figured we'd jam on some of our cynicism regarding some of the social media trends and algorithm going out there on this topic.
I love it.
But before we get into all that, love to get your background, how you got to where you're at today, and then, of course, the launch of Circle City. So take it from there.
Yeah. So, all right, high-level view, my background. I started my career as an accountant, CPA, Big Four audit. I really didn't have any interest in doing investing or anything really finance related at the time, but I came out of college during the financial crisis, which was an interesting time to start working. I got into investing actually through like a gag gift from my wife, like a Investing for Dummies book, like, hey, go read this, dummy, kind of thing. And I thought it was super interesting, believe it or not, and got deeper and deeper into the topic, read Buffett's letters, that kind of thing. So I decided I want to get into the industry, but I didn't have any really real credentials to break in. So I sat for the CFA. I did that and took a job at a fund here in Indiana. And I worked for them as an analyst for a couple of years. Really loved it. Loved my time there. Like the first day I came in, I got handed a copy of Greenblatt's "You Can Be a Stock Market Genius," and I was like, "Oh, this is where I'm meant to be." So that was a great learning experience and really defined and refined my investment process then. Along the way, I was introduced through a colleague, the world of investing in and owning private companies. And as like a kid with star-crossed eyes, I was like, oh man, buy 3 times earnings businesses and make a ton of cash and you control the cash flow. So I thought it was the coolest thing ever. at the time. I have become a little more of a crusty cynic on it since then, but it's been a good run. I met my business partner during that time. You know, he and I were both interested in running a company, but we didn't want to start something from scratch. So we had the idea that we would go buy a private company and then run it, grow it, etc. So we spent maybe a year, 2 years looking at all sorts of businesses to buy. We finally bought our first company in 2018. It was a little nighttime trucking business. And I actually did another podcast kind of going into detail on how awful that experience was. It was like nighttime parts delivery. So like running trucks in the middle of the night, delivering engines and automotive parts. So that was our first business we bought in 2018. We actually sold that company and reinvested in a couple of other things using our own money, and SBA financing is really how we've gotten to where we're at today. So we're not actually like a fund with outside investors or a GP/LP structure. We just have kind of bought and operated our own little collection of private companies. We've got 4 groups of businesses that we're in today, with apparel and soft goods being the largest. Vermont flannel, so I'm wearing one of our flannels. Vermont teddy bear, so we manufacture teddy bears. Those are our 2 largest holdings, and then a couple of other industries that we're in. So it's been kind of a weaving journey, if you will, to get to where I'm at today.
So what would you say was that impetus at the time? I mean, yeah, you came across a business where I'm like, oh, I could buy it at 3x. But like even before that, I mean, were you one of these like me? I'm on Instagram, you're seeing the videos, or been a Shark Tank fan forever and like, oh, we could just own a bunch of private companies and just manage the cash flow, and I could just chill out at home and, you know, hang out. I mean, where did it all come from?
Yeah, that's a really good point. And, you know, I think when we were starting to look at stuff, which was maybe in the 2015, 2016 timeframe, you know, that trend of like everybody wants to be a small business owner didn't really exist at that point. I think I was attracted to this idea of yeah, I'm gonna go cliche Buffett route, like, oh, if I own 3 or 4 businesses and then I can pay myself and allocate the capital, like either buy stocks or buy more companies. Or really, I was attracted to the idea of like barbelling my net worth to have exposure to private companies and exposure to the public markets, and then like using the learnings from each to make better decisions on both sides. And then kind of going where the opportunities were. Like, as naive as I was at the point in time, like that sounded really cool and attractive. So I've learned a ton along the way, and it's a lot harder than that. Like, I wouldn't recommend that people just say, yeah, there's an easy button, like go buy an HVAC business and you're going to be making hay. It doesn't quite work that way. Yeah.
For sure. I mean, you know, and one more question on, you know, this direction. I mean, why was it more appealing to go out and look to buy some of these small businesses versus just being like, oh, that's an interesting industry. Let me just start it from scratch. And, you know, rather than having to, you know, get an SBA loan, do all these different things. Like, why not just do it that way versus going out and just buying some of these small businesses?
Yeah, I guess, you know, coming from an investor standpoint, like I had been investing in the public markets leading up to that point in time. So the idea of like you're buying an existing set of customers and existing revenue stream, and there's employees and ops in place, like you've done some of the heavy lifting and you don't have to pay a huge multiple for it. Like, that was attractive to me. The lift to start something from scratch just sounded way too high, and the path to go all in on it and like be full time sounded like was going to be a lot longer than I wanted it to be. So when I, you know, found out about the SBA programs where you can, you know, basically buy a company and put 10 down, in hindsight, that can cause sleepless nights, right? Because you're 10x levered on a business and you better underwrite it well and then execute. Like, that was pretty attractive, right? That was pretty attractive at that point in time. So I don't know, the startup, yeah, it's just more of a heavy lift than I was interested in doing at that time. Yeah.
Fair enough. Hey, it's extremely hard. Listen, I've been building up our family business, you know, I mean, it existed before I came in, but I'm in it 13 years. I still feel like, you know, we're still in like, you know, I got that startup energy, right? You know, and yeah. So it's hard for sure.
Yeah. And that's the hope, right? You buy something where like, hey, they're already doing a few things right. And if we can pull a couple of levers and get some upside from it, like that's really where you can add a lot of value in the small business world.
So, I mean, let's talk some of your your early stage criteria when you first started saying, all right, we want to deploy this strategy. We don't know shit, but pardon my French, sorry, but we don't know anything yet, but like, let's try this. And then, how did it start? And then how did your philosophy and strategy evolve from when you started to now?
Yeah, I feel like in really what I've tried to do is leverage like the same investment framework across both public and private stuff. So when investing in public companies, I tried to use that same thought process in looking at private companies when we went down that path. And when I went to go work in the industry, I was kind of handed the works of the Buffetts and the Grahams and Greenblatt and Burry and all those guys. So really value investor to the core, find cheap and stable cash flows, don't pay a ton for it, and look for stable companies, right? Where you don't have to underwrite, tons of growth and look out 10 years to be a hero and have investment success. So using that same thought process, when I was looking at private companies, it was really pretty simple, right? Like, is this a business that I understand? And like, really one lens from an investor to an operator standpoint is like, if someone doesn't show up for work, are you willing to go do whatever that person was doing, right? So as an investor, you don't really have to worry about that. But like, if you're buying a whole company and on day one, like 2 of your truck drivers don't show up, like, yeah, you're probably getting in a truck to go like work that day. So kind of a humbling experience, but yeah, it's looking at the performance and saying, am I getting stable cash here, stable revenue? And I love stability over high growth, right? And so like, I'd rather buy a company that's flattish over 6 years, and I know, okay, it's really, really stable, and maybe I can add to it, as opposed to a company that's 2 to 5x over the past 5 years, right? That just sounds like I'm more vulnerable in that situation, especially if I'm using a ton of debt to go buy it. So yeah, cheap and stable cash flows, easy to understand businesses that are simple and like maybe have some good barrier to them, right? Like, we weren't really interested in looking at restaurants or franchisees or even retail at the time, even though now we own some retail. I think it's a little nichier than that, but we just had kind of a couple high level principles that we used in looking at stuff.
Absolutely. That you hit on my next question a little bit further when you're talking about the, loving stability versus high growth and looking for cheap and stable cash flows. Because, I'm trying to put myself in your shoes when you're evaluating some of these businesses where you're like, all right, do you want something that, ultimately is good, you dream that will become this behemoth, the main dominant company in its niche or sector? Or is it more about, all right, it's, maybe it's been flat over those last 5-6 years and it'll probably stay there. Maybe it'll grow a little bit, but I'm totally cool. Like, that's something I just want to own because I know for sure that there's a bit of a barrier to entry. There's a bit of a moat, but those revenues will continue to
No doubt.
come in. Is that really the thought process?
Yeah. Yeah. Especially in the private business world where like, if you're using the SBA and let's say that you're putting 10 down and borrowing 90, so you're 10x levered, like, just by definition of paying down the debt over that term of that SBA loan, like, you're going to get a phenomenal return so long as cash flow stays literally constant over that time frame. So when looking at that, I would way prefer to have lower risk and just nice stability, and I can count on it, and I don't have to like come in and be a hero or keep that momentum going. I would way prefer that. And honestly, those high growth companies, or a company that went from like 1 million to 10 million over a short time frame and they're profitable, like, there's a good chance that they've already pulled all the levers to like optimize it, right? So if I come into that situation, what am I going to bring to the table to like take it from 10 million to 100? It's like a totally different skill set, whereas if I look at a business that's 4 million in revenue and it's flattish for 10 years, it's like, okay, cool, I just got to keep the lights on, and then maybe we can pull a couple of strings to get it from 4 to 5, but I don't need to be a hero. So the moment I need to be a hero, like, then I start not sleeping well at night, right? Yeah,
for sure. I mean, and what sectors are you mostly looking in nowadays? Where are you hunting? Where's that selection coming from? And love to hear more there.
Yeah, it's kind of evolved, right? So when we first started, it was, when you don't have a business that you're already owning and operating, it's like turn over a ton of stones. So just like investing in the public markets, like, you're looking at everything constantly because you want to get a good feel for what you're looking at compare it to others, right? If you're looking at one trucking company, like go look at 10 others and compare the, do the revenue profile and margin profile line up from this private company to those other 10 private companies. So you're turning over a ton of stones and really just trying to find stuff that will make you say no, right? So you just keep peeling back layers of that onion until you find something that's like, no, okay, I'm going to pass now. And so that was our approach in the early days, just brute force, turning over tons of stones. We got into trucking. It was a good deal. And I would say the business had a good financial model to it. Like we got paid weekly from our contracts. We paid our expenses weekly, so we didn't have a ton of working capital. So good business model, but like the ops weren't well suited to us, right? Like no line of defense, and it's running in the middle of the night, so you're getting phone calls like, "Hey, my truck broke down. I'm 400 miles away. Can you help me?" Right. So yeah. So you learn quickly, the types of businesses that you're open to and not open to. So yeah, I mean, it just kind of evolves over time. Now today, where we're at now, that we're operating in a couple of industries, the acquisition pipeline is like you're already in the industry. You're a player. People know you. They'll call you. You're talking to your suppliers and others. And so it's a little easier to find a potential target when you're already in an industry from like I'm going to add on to what I already own standpoint. Finding something completely new, our thinking has probably changed from, 10 years ago to today, or sorry, 5 years ago to today. Like, I don't want to be as hands-on, and, having a good management team in place. So something that's a little larger and more stable, probably more attractive to us. So yeah, most of the stuff I'd say come from our own internal network at this point, but it's taken 5 or 6 years to get to that level.
And is it mostly mom and pops that you're talking to?
Oh yeah,
yeah, that's right.
Yeah, almost always. We're actually taking our first approach into like a public company activist situation, I guess, where we made an offer to buy a decent sized stake in a really, really small public company, and like help them deploy cash and do something with their business. Because what's really fascinating about microcaps is I've got this appreciation for it now that I didn't have maybe 6 years ago, where I'm like, yeah, that company's like just as big as us, right? Like I know what they're going through because I'm doing the same thing, right? They're just small businesses at the end of the day with like a public listing, So it's interesting. I kind of view that smaller end of the microcap land as like, yeah, all right, we could potentially get involved in some stuff like that.
That's interesting. You should check out Ben Claremont from Devonshire Partners. They're looking to deploy a very similar strategy. Go check out his newsletter. Easier said than done, right? Because it's like, on one hand, is coming from that private equity background, it's and he'll be the first to admit, it's very difficult. Where on one hand you want to talk to some of these management teams about just taking the private and just managing under there, and then maybe spinning it out one day, versus buying a chunk and being activist, suggestivist, friendly, direct. Like it's a tough one to navigate, because a lot of these management teams are used to private equity or groups coming in saying, wait, are you coming for me? Like is my job at risk, right?
Yeah, absolutely. No, that's good. I'll have to check that out. Thank you.
Oh, definitely will. So, I started off the pod with saying how the algorithm, and we're cynics on it. You kind of alluded to the fact of how difficult, deploying this model is. Like you said, you're dealing with mom and pops. Yeah, sometimes you get lucky because, it's just, the two roads meet, where it's a mom and pop trying to looking for an exit. You think it's a good quality, stable business, and there we go. We figure out a price. We're gone. Like it's not always that simple, So, what maybe share some of your experiences or that really kind of elucidate why this model isn't as easy as Instagram or some of these other platforms would make it seem.
Yeah. The knowledge gap is just huge, right? Especially on the smaller end of the spectrum. So like if you're looking at, and we bought really small companies in the past. I mean, anything from, let's see, we've done from like a 250K in revenue to 10 million in revenue and in between. in terms of revenue, acquisition size. And so on the small end of that spectrum, like you've got a really knowledgeable business owner who's doing a ton of stuff and they know way more than you'll ever know on day one. So you're jumping into that situation, trying to figure out what they're doing and when, and trying not to drop a ball, right? So overcoming that hurdle is just really high. You're insanely involved, and there's usually not a whole lot of room for owner comp, right? If you're buying a business, let's say with 200K to 300K of earnings, and you're putting 10 down and borrowing 90, there's just not a lot of wiggle room if you want to pay yourself and reinvest back in the business and do more and cover your debt service, right? So it's just a fact of reality. Like they're small, they don't have systems and processes in place for the most part. It's a few number of people doing a lot of jack of all trades type work, and you're kind of like thrown into the gauntlet, figuring it all out and just navigating it. Yeah.
Let's talk about your time, and how you allocate your time for this stuff.
Yeah.
Because, I mean, how many businesses do you have under in the portfolio now? What would you say?
So we've got four groups of companies with a couple brands within each of those groups. Yeah.
Got it. Okay. So, I mean, each one of those brands probably has their own management team that run that, so probably collectively you're in the 12 to 15 range if we're just kind of breaking it down. Right?
Yeah.
How do you allocate your time?
Yeah. And I still love following the public markets and really want to stay involved in that. So it makes it even harder. I think compartmentalizing my time is probably the biggest challenge I have, right? Like there's just not enough hours in the day. And so it's trying to be more impactful now and really leverage the work of others and be more of a manager through managing through the output of others as opposed to doing it all yourself, which was very much our approach in the early days. It's roll up your sleeves and you're just doing everything that you can to keep things going. So there is this benefit of critical mass, right? It's a very real concept. As the larger you get, so long as you're profitable and can maintain it, you can hire a team to say, great, I was wearing 6 hats before, now I'm wearing 1 or 2, right? And so that has been a very real thing for us as we've grown. But I mean, I'd say I don't have the answer. If anyone has good answers on how to compartmentalize their time, I'm looking for them. That's probably my number one pain point today. It's just you go in a bunch of companies and you've got a backlog of 100 good ideas at one company, and you multiply that by 4 or 5 or 10, you're all right, great. What should I go do now? Right?
Yeah.
There's no one to tell you go do this. It's you got to figure it out on your own.
Not only that, I mean, how do you also figure out how you pay yourselves, right? Because on one hand, you're thinking to yourself all right, yes, we need to get paid for the work that we're doing. We did a ton to bring this all together. We maybe having to fix some things up with the business.
Yeah.
And also, we have families to feed. We got to put food on the table ourselves. We feel that we should be compensated fairly, and it's you and your partner. How do you decide, all right, what's a fair percentage or a fair amount? I'm not asking how much, by all means. I'm not.
Yeah. It's all good.
But I'd be curious about percentage and how you figure that out.
Yeah. We came into it 50-50. From the outset. I know there's probably folks that have different perspectives on that, right? It can be risky if you're not well aligned. So I've been very lucky to have a good partner. We see eye to eye on everything. Well, most things. We have 2 different worldviews, but I think that's a good thing. So he's more of an operator and I'm more of the finance accounting side of things. So we're 50-50 from the outset. And our original thought was, let's buy enough cash flow, buy enough revenue that we can afford to pay ourselves something on day one. So we said, okay, we're going to make a larger acquisition or acquisitions. We actually did 3 acquisitions in the span of 4 months back in 2019 to jump in with both feet. So we did that and said, okay, now we've got enough cash that we can service the debt. We can take a salary. It wasn't a big salary, but a salary. And then reinvest the rest into more acquisitions. So our salary is slowly inched higher over the years, but virtually everything else is just left in the company to pay down debt and reinvest in more stuff. So we've just kind of snowballed it into more acquisitions. But it's taken, 7 years to get to that point where it's okay, now it's kind of a machine in and of itself.
How do you decide when to sell one of the businesses? You mentioned that the trucking business, you were excited to get it. And then, I mean, That was more of like a just let me give this headache to somebody else, or maybe probably to another trucking business that understands, what's involved here. But I mean, other than it just being like a headache for you guys that you just don't want to be involved in it, whether you make money on that sale or not, what are some of your other criteria? Say, I think it might be time to offload this asset.
Yeah, it's a good point, and I think something we've been reflecting on more lately. We have not had, starting out how we came about, right? It was all opportunistic. Like you're just looking at anything, you'll look at anything, and we would have bought anything if it kind of felt right and met our criteria. So the first exit we made was obviously because the lifestyle of running that company was just not sustainable. Super hard on the marriages, super hard on blood pressure, right? Everything. So that one was a pretty obvious exit. With the only other exit we've had is we used to own a chunk of accounting firms, bookkeeping. We sold that to the team that was running it a couple of years ago. I think in 2021 we exited that business, but we haven't had any other exits to date. So we now have a portfolio where like one company dwarfs all the others by like a large margin, right? It's huge, and the others are kind of like small to medium sized. And common sense would say we'll sell off everything and focus on the one that's large, right? I don't know that we're that type of operator that says, we're going to go all in on one thing and try and 10x it. Like, I just don't think that's what we're trying to accomplish. We like this portfolio of holdings and talking to the teams that are running them and thinking about them and making slow change and progress and then continuing to add to it. So I don't think we've been thoughtful or intentional about exit. We've just kind of been running and opportunistic about acquiring other stuff. But probably something we need to put some more time and effort into over the next year. Yeah.
Well, you know what? It's probably been to your benefit as you're growing out the portfolio, because I'm sure some of these mom and pops don't necessarily want to sell to a firm or to to partners that are just in the business of flipping. Right.
Oh yeah.
Because some of them stay on. There might be family members still a part of it, getting paid.
Yeah.
Or they're looking out for people that they worked with for 20, 30 years. Like they don't necessarily want to flip, sell a company to a group and now it gets flipped again and again. Like that.
Yeah.
That doesn't help anybody.
No doubt. And the original thought was, well, if we own a couple different businesses, then if you've got one horse that's down, then you've got another one that's still keeping you in the race. So you kind of have some, like, you're not totally and completely dependent on the outcome of one business. And we have really different seasonality cycles within each of them. So it's nice to like round it out with like flannel, right? Nobody's buying flannel in May or June or July. So like the business is burning cash from, call it, January to August, and then everything is made September to December of every year. So it's nice to have like some counter seasonality in the portfolio as well. Yeah,
absolutely. I mean, what's love to hear a case study or an example of maybe one company that's currently in the portfolio, how that acquisition came about and what it's been like operating that business, maybe helping it grow and scale a little bit. Maybe give us the biggest one. Come on, like that's the.
Oh gosh, give me the biggest one.
Yeah, let's get the biggest one.
Those people are going to be listening to this and be like, "What the hell is this guy talking about?" So our most recent acquisition was in April of this year, and it was our largest by revenue, and it was the Vermont Teddy Bear Company. So Vermont Teddy Bear Company, it was a business that had been around for a long time, several decades. They're a manufacturer and retailer of teddy bears. So it's in Vermont, just south of Burlington, Vermont. And we've got a teddy bear factory, and we manufacture teddy bears at that factory, and we sell them in our factory store at the plant, and we sell them online. So we're only a couple months into that. We're tucking that into our USA made apparel and soft goods business. So it's paired up with our team at Vermont Flannel. And then we've got two American-made denim businesses that are in it. So I guess maybe we've become kind of a known buyer in that industry. So my partner is very active in like talking to suppliers and talking to other people that are in that space, that USA-made like apparel and consumer products space. And we bought the Vermont Flannel Company in April of 2022, and we've done some partnerships and product collabs with the folks at Teddy Bear, and they were looking for a buyer, earlier or maybe late last year, and they called us and said, "Hey, we know you guys bought Vermont Flannel. Are you interested in taking a look at our company? Are you interested?" And we said, "Yeah." And so that's how that acquisition came about. So it's kind of like working the network to be known as a buyer, potential buyer in that space. Yeah.
What's been a, not necessarily with either of those two, but amongst all the portfolio companies, what's been a challenge that has come up in operating this type of structure that, you're like, oh man, did not see that coming. And then how'd you overcome that challenge?
Yeah, there's always, if I could give one piece of advice to people who are looking at buying companies and they're going to plan on doing it with the SBA and borrowed money, is like, go ask for more money than you think you need. Like, working capital is so underappreciated. And so many business owners, they don't understand the concept of working capital. So they want to leave you with none, right? And they're like, we're going to keep all the AR and cash and the inventory and blah, blah, blah. And here you go. And like, that is just a really, really heavy hurdle to jump over. So working capital and having good liquidity, line of credit available, to overcome that, super, super important. And I know it's a cliche, but good people it's just tough, right? Like, when you find good people, they're excellent. And when you don't have good people, it's really, really hard. And I would say I don't even know that we've cracked the code on like the best way to find the best people, right? Sometimes they come about through other good people on your team, and that's how they come to you. But when you got good people, things get a lot easier. They get a lot easier. So I don't know. Those are probably the two like biggest hurdles we've had over the years. And yeah. There's always something. It's a game of whack-a-mole, man. It's a game of whack-a-mole. Yeah.
I can only imagine. Listen, you're talking to somebody who operates in microcaps, man. Like it is just, there's as much similarities as it gets. I mean, speaking of which, not to make a quick segue, you mentioned how like you've been kind of looking at, maybe doing some more activisty type stuff and some of these public microcaps. I mean, what's been some of the impetus for you to start looking at some of these, micro nano cap companies to do some more direct investing, activist, suggestivist type work?
So what we have found over the years is that we are really good at finding deals, getting a deal done, closing it, structuring it in a way that makes sense and it works for both sides. And what we're less good at is being the hands-on operator. So we have been most successful when we've bought a company, put someone in charge to run it, and then like gotten out of the way. And especially more so lately. So we have more opportunity than we do capital, and maybe more opportunity than we do good managers, I guess, internally. So if we can find a company where there's someone who's a good operator and they want to run a business and they just need help, A, finding a deal, or B, putting it together and structuring it, like, that's where we can add value. So I'm less concerned about hoarding every percentage of equity and saying we've got to own 100% of everything we'll ever do. I'm okay owning 10, 20, 40% of something, and then working alongside someone to run it, get it done. And to me, that's what's interesting in the microcap space is we've learned a lot of things too, right? So we've seen some things in our own businesses, and on the acquisition front, we can add value there. So if we can bring that to a management team that's already pretty decent and they want to run a business, like, hey, I think that could be a good partnership. So
yeah, that's makes a lot of sense. What's the ultimate goal with Circle City? Like, how big do you want to get? Do you want to keep getting big? Like where do you see yourself in 10 years?
5 years, yeah. Oh, 10 years. Oh man,
for 5. Sorry.
I know. I think that's evolved over the years, right? Because we've gone through some stuff. We've gone through some cycles. We've gone through some ups and downs. Like, there's so many good and painful lessons that you learn along the way. And I've only been at it for 7 years. So, you learn a lot and you reflect on that. I know that what I do like and do best is, looking at companies, looking at financials, helping companies understand what the financials are telling them, like basically reading the numbers, right? And a lot of small businesses struggle with that, I think, and or have poor quality financials. So, if I could spend all my time just doing that, and that's what I love about the public markets, right? It's the same thing. It's picking apart financials. It's looking at businesses. Then I think I enjoy doing that most. So I don't know that we have an intention to say we want to 10x and exit and sit on the beach. I think the stuff that we own is all good stuff, right? That we could own for a long time, and then just keep doing it. So I think we're maybe like a not rudderless, but like I don't know. We're not trying to build with the intention of hitting a point B and peeling out. Yeah,
got it. I mean, has it been harder finding good deals and with the, everybody on Instagram saying that, it's so easy to do this, but has it actually made it more difficult for, real professionals like yourself that have been doing this a while to find them?
There's always stuff that's out there. I'd say the best stuff is probably going to be, well, I think maybe some of the people that are coming into that space, like, I haven't looked at, but I've heard of the, multiples in like the HVAC space, for instance. And it seems like everybody's gravitating toward that for whatever reason. And so I don't think that we would ever play in that, but I'm guessing that's probably been impacted by that popularity on social media and stuff. So I don't think we've seen it in our space. I do think there's an opportunity for, like retail and like niche consumer products right now, because it's just been a really out of favor industry, and COVID had this like crazy demand pull forward and then like deflated that balloon for, I don't know, going on 2 years now post COVID. So I think there's an interesting opportunity to buy like good brands that just need some like fix up help at the moment. So I don't know that we've seen it in the places that we're in now and the things that we're looking at, but I could see that there's probably a few industries that are getting bit up by folks like that. Yeah.
Got it. So, I mean, we've covered a lot, and this has been a lot of fun. I love, listen, it's fun to kind of go outside or talk to MicroCap adjacent type pods. So I've been,
I like that.
This is great stuff. Final question for you. I mean, for those that have, seen the annoying Instagram videos and all that stuff, or maybe have gotten this far, what advice would you give to folks that are serious about wanting to, come up with a similar structure as Circle City and go out and buy some of these small businesses?
Yeah, and I've gotten a lot of emails and questions about that. I did a podcast a while back on acquiring minds and had this kind of a similar conversation. And a lot of people want to jump straight into the end result, but really it's been like 10 years in the making, And so, I kept a full-time job when we bought our first company and just did it on the side and kept it a pretty small total exposure for myself personally. And I think that approach can be good, like tiptoe your way into it to see if it's something you like doing, because if you jump in with both feet and you wind up not enjoying the industry you're in or the type of work that's involved, or like being the guy where someone doesn't show up and you got to go drive the trucks, right? Like if you find out the hard way that you don't like that, like, oh man, there's not a whole lot that you can do about it after the fact. So I think getting smaller exposure to it first can make more sense than just saying like, I want to go buy $1 million EBITDA business and I'm going to hire managers to run it for me. Like that's not as easy as it sounds. I don't know. I haven't seen it that easy. So I think having like side hustle type exposure to small business world first for some period of time can be a better like litmus test for if it's for you.
I think that's a great place to end it, and phenomenal advice. So Colin, with that, where can our audience go and find more information to follow you on social media as well as your website?
Oh, yeah. Okay. I've got a website. It's called circlecitycapitalgroup.com. It's a mouthful. Circle City Capital Group. I am on Twitter. Value Don't Lie is the handle. Yeah. Yeah. And if there's any Rasheed Wallace fans out there, oh yeah, you're a big NBA fan. You got to get that reference.
That's good. That's very, very high quality right there.
I've had a couple of people who are like, oh, I get that reference. And they're all from Detroit.
Yeah. Oh, that's cool.
So yeah, Value Don't Lie on Twitter. Circle City Capital Group is our website. My email's on there. It's just Colin at circlecitycapitalgroup.com. Yeah, happy to chat anytime.
Absolutely. Colin, thank you so much for joining me today. Really do appreciate it. Good luck. Stay safe. I really look forward to our next conversation.
Hey, thanks, Robert. Appreciate it, man.
Thank you.